This is the most powerful indicator I've ever used, and I'm not just saying that because I created it. The squeeze tells us when a stock is about to have an abnormally large move.
The squeeze is my favorite setup. You can swing trade it, you can day trade it, you can scalp it, you can go long, you can go short.
You can use it across all time frames on all asset classes, stocks, futures, options.
When you have a squeeze,
and you have a squeeze.
But I love the squeeze.
We also have a huge squeeze.
I love everything about the squeeze, and I'm a firm believer you can build a career really around that one setup. What's up, guys? This is Taylor from simplertrading.com, and if you want to catch explosive moves before they happen, the one thing you need on your charts is the squeeze indicator. So in this video, we'll talk about the squeeze, a few of the basics, and for me, this is my favorite topic, reason being the squeeze is the only thing I trade. I found the squeeze going on about 10 years ago, and that commitment to make it the only thing I focus on, right, live it, breathe it, make it my own, that completely changed my trading for the better. And what I found is if you can find a squeeze of the right criteria, which we'll talk a little bit about here in this video, that can lead to a 70+% win rate. So we'll jump in here, guys, talk about a few of the basics, and hopefully get you going on your own squeeze journey. Alright, guys, so before we talk about the indicator itself, if you can grasp this concept, I think you're ahead of the majority of retail traders. So this is a daily chart here for the Bitcoin futures. And I want you to notice from beginning of June until the beginning of July, there ain't too much happening here. You got your back and forth, right? They dump it, they pop it, they rally a bit, they flush, they rally, they flush. It's a lot of back and forth noise. We're not really going anywhere. And then comes mid-June, or mid-July rather, and then all of a sudden you go from that big back and forth chop to the beauty of that big explosive breakout. The key thing to understand, and this applies to every stock in the market, 70-80% of the time, it's a lot of this back and forth. They flush, they pop, they dip, they pop. The other, call it 20-30% of the time, you get these big explosive, really clear directional moves. That's where as a trader you can make a lot of good money. So as far as the squeeze here, you want to think of the squeeze like a coiled spring. So on the Thinkorswim platform, if you go to the Studies tab, all right, Studies, Edit Studies, and then you want to search for TTM Squeeze. All right, add that to your charts, and then there you go. You've got the TTM Squeeze. So a couple of the basics here. We've got the bars and the dots. So down here on the histogram, if you have a red dot, that means that given stock on that given time frame, you've entered a squeeze. And we can get technical. What that really means when a stock has entered a squeeze, it's a Keltner channel and a Bollinger Band thing. So when a stock enters a squeeze, what that really means is your Bollinger Bands have moved inside of your Keltner channels. And if you guys want, you can put those on your charts. In plain English, you've reached a point of compression. Everything's tightened up. The average true range is tightened up. The volume's tightened up. The implied volatility is tightened up. Everything's compressed. Following that compression phase, you get the expansion. The expansion, of course, is what I call the good stuff. So when you have a red dot, you've entered a squeeze. For Bitcoin here, this is a daily squeeze. And what that tells you is all those red dots, you're in that compression phase, and now Bitcoin is going through that process of building up the energy, potentially gearing up for that big explosive move. Got the red dots, we're in the squeeze, that's your compression phase. And again, your compression phase looks a lot like that. Little flush, little pop, all the back and forth. When you go from a red dot to a green dot, that means your squeeze is fired. You've gone from the tight range-bound compression phase to, again, the good stuff, the expansion phase. Red dot, you're in a squeeze, building up all the energy. On your green dot, squeeze is fired. That kicks off your expansion phase. That can give you that big explosive directional move. And then aside from the dots here, you have the colored bars. That's your momentum histogram. You've got the light blue, the dark blue, the red, and the yellow. So a light blue bar, that is bullish momentum, and it's on the up and up. So bullish and getting stronger. A dark blue bar, it's still bullish. Bullish above zero, but a little bit on the decline. And then red, of course, is bearish and getting stronger. I'm stronger for the sake of the bears. And then yellow is, all right, we're still bear on momentum, but it's a little bit on the up and up. So for the Bitcoin futures example here, Again, you got your red dot. We have entered a daily squeeze. We're in the compression phase. The spring has coiled. And then as far as momentum goes, you have the light blue bars. That can be a pretty good gauge. They want to go from compression to expansion in the form of an explosive move towards the upside. So let's look at a few examples here. One would be the monthly chart on the S&P 500. And what I want y'all to do is put the free squeeze on your charts. Go look at a few weekly time frames, 15-minute, 30-minute, hourly charts. Look at a few daily charts. You'll find most big moves begin with a squeeze. So for the S&Ps here, this is your monthly chart from the end of 23. Red dot, we're in a squeeze. Spring is coiled, compression phase. We've got the light blue momentum bars. Momo is bullish and on the up and up, and eventually we go from a red dot to a green dot. Compression to expansion, squeeze fires, and you get the explosive, bigger than directional move. And here's the beauty. Anything you want to buy as far as a day trade, a swing trade, whatever the case might be, everything gets so much easier on that part of the push. We're back here getting long, getting short, getting chopped up, getting stopped out. Then they go on and make that big concentrated move. Again, the beauty of the squeeze is there's your heads up. 80% of the time we're doing a lot of back and forth nothing. The other, call it 20% of the time, we're gearing up for something good. Big part of my trading is I don't do anything until I have a squeeze. I find my squeeze, and of course I look for all of the criteria. But yeah, so S&Ps here, big monthly squeeze kicks off a very modest 47% rally, and then JP Morgan here from the daily time frame. Daily squeeze, red dot, momentum bar above zero in light blue. Squeeze fires, that kicks off a nice little 12.5% push. And these can work for shorts as well. So if you look at Microsoft here on the 30-minute time frame, Microsoft had a 30-minute squeeze. Now on that one, look at your momentum bars. You get your red dot, you're in compression, and then your momentum bars go from dark blue to red. That negative cross, a pretty good heads up, that squeeze might want to fire short. You find that combo with price below your 21 EMA, can make for a nice short setup. Another example here would be, let's go look at, say, the QQQ futures. So I trade the squeeze on stocks, options, futures, 15-minute time frames, 30-minute hourly, all the above. Give me a good squeeze and I am taking it. But here's your QQQ futures. And albeit not a huge move, but you had a 2-dot daily squeeze back here early June. Momentum bars above zero, price above your 21 EMA. That kicks off on the NQ a nice, we'll call it 7.5 to 8% rally. So again, put the squeeze on your charts. Go look through a few different time frames. Your favorite stocks. Go through a couple of the scans. And again, I think you'll find a lot of the better, more explosive moves, they begin and end with a squeeze. All right, so with a few of the basic understandings out of the way, one question I get pretty often is where can I use it? Is a squeeze a day trading thing, a swing trading thing, a scalping thing? And in my experience, it's all the above. So one example here, one name I'm currently trading is this 1-hour squeeze here for Apple. All right, and we take a look at it. We got the red dots. We're in a squeeze. Here comes compression. We've got a light blue bar above zero. Momentum is on the buy side. And I like them right near that 21-period EMA, that 21-period exponential moving average. So for a 1-hour time frame, I'm not looking for a huge multi-week rally. This is more of a short-term trade. Find that 1-hour squeeze, get long near my 21 EMA. Then I'm trying to play for a short-term pop into the 2.5 to third ATR extension on that 1-hour time frame. If I'm looking for more of a classic, call it swing trade position, that'd be something like this current daily squeeze here for Kroger. And that kind of squeeze on that kind of time frame is a little bit more up my alley for a swing trade. Daily squeeze, light blue bar, red dot, entry near the 21 EMA, and then you hang tight, give the trade enough time to work. If they can kick off the expansion phase as the squeeze fires, then you play that push, ride the wave towards your upside target. And like I showed you there for Microsoft, these can make for great day trades in both directions. So this is Microsoft on your 30-minute time frame. Here comes your squeeze. You've got bearish momentum below your falling 21 EMA. You don't short that and look for a multi-week, multi-month flush, but that can make for a great flush that lasts for anywhere from about 8 to 10 bars. It's a good rule of thumb with a squeeze. 15-minute time frame, 30-minute time frame, monthly time frame, bullish or bearish, when they fire. Once the expansion phase kicks off, the move tends to last for about 8 or 10 bars. So if that's a 30-minute squeeze, when you get your first green dot, you tend to want to look for about, again, 8 or 10 30-minute bars in that direction. If it's going to be that daily squeeze there for Kroger, same rules apply. Find your squeeze, look for an entry near the buy zone. When they finally kick off the expansion, that might take you for a good 8 or 10 bars higher. Now my goal here, let's go back to the Bitcoin futures, or better yet, even Kroger here. My goal is I want to build my position and get long or short before the squeeze fires. So I want to find it in that compression phase. And in this case, we're bullish. We got momentum above our 21 EMA. In that case, I want to get long near that 21 before the expansion. And for all you options traders out there, the beauty of that is you want to think in terms of implied volatility. When Kroger's sitting here and they're popping it, they're dipping it, all of that glorified back and forth, that glorified chop, you're not getting that big IV pump. So your 70 strike calls, 74, 75, they're relatively cheap. Market makers pricing in a modest expected move when the squeeze fires. Being that can trigger a bigger than expected move, it's a little bit twofold. Your calls gain value, one, because you caught direction, but also, two, because you're catching the IV pump. Find your squeeze, buy them when nobody wants them, catch your breakout, squeeze fires, IV pump working in your favor. All right, so a little bit more here on the entries and the exits. When I find a squeeze, when do I get long? When do I get short? How do I get long? How do I get short? And like I mentioned, I do like to take my entries right near that 21 period EMA. But if you want to learn a little bit more about the squeeze and how I trade a squeeze, I did do an entire free class on the TTM Squeeze and the stacked EMAs, which was pretty much a foundation I started with going back about 8 or 10 years ago. So be sure to check that out. That goes a little bit more in detail on, again, the stacked EMAs label, which we include in the free class. You get the free label, you get a couple of free scans, and again, that goes a little bit more in detail on when do we buy a squeeze, when do we get short, what's a good entry, when do I buy calls, etc. Be sure to check that out, and then show you guys one more thing here. So in terms of the system I've built based on that original foundation, here's our last 98 trades over in my room. And using that squeeze-based system, we have taken 98 trades with 69 wins, 29 losses, good for a 71% win rate. And the cool thing is you've got some futures trades here, a lot of options trades, a couple of long, shorts. We're trading the daily squeezes, weekly squeezes, 15-minute. Every single trade has that one thing in common. They all have a squeeze. I only trade the squeeze. But a couple of more things here, guys. So in terms of good entries, again, I think you want that 21 period EMA on your chart. Right? Nice and basic, 21 period exponential moving average. The 21 EMA, that's your home base. That's your mean. So if we're looking back at the Microsoft example, and again, there's more that goes into it, which I discuss in that class. But back here for Microsoft, you've got your 30-minute squeeze. Momentum shifts negatively to the sell side. You're right underneath your 21 EMA. In that moment of time, if you can find that with negatively stacked EMAs, it makes for a great short entry. Squeeze, negatively stacked EMAs, you get short under your 21 EMA. Stop out above it and play for a push. If we look at, again, Kroger here, the old Kroger. Okay, so here's a 30-minute squeeze, and pretty good entry. Right near our 21 EMA, we check momentum. Momentum is bullish and on the up and up. If I'm going to buy it, it works in my favor, and then stacked EMAs. I won't go too much into that for now, but that's helpful as far as structure. When you're thinking structure, think the backbone, the foundation of the chart. And if the EMA's label here is green, you have positively stacked EMAs. You've got the 5 above the 8 above your 21, 21 above the 34, etc., etc. Plain English, you have good bullish structure. When you can find a squeeze with good bull structure, right, stacked EMAs, and then momentum here on the buy side, buy that near 21 EMA. That can be a great foundation. But again, if y'all want to learn more, and I encourage you to learn more, we'll have a link here in the description for the free TTM Squeeze class. Like I mentioned, you get the stacked EMAs label, you get a bull scan and a bear scan. And I think that'll help you guys really, do what I did about 8 or 10 years ago, which was find that one thing to make my own. And then you're waking up every day as a trader with a really clear focus. I've got one set of indicators, one setup, one moment in time. You take that, you build on it, and I think that can make this game a lot easier for you. But I hope you all found this helpful. A couple basics on the TTM Squeeze. Again, be sure to check out the free class, and we'll talk to you in the next video. Adios, guys.
What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video, and if you liked the video, go on ahead and comment down below, hit that like button, and make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.